It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today.
Well, it's always a pleasure to be here and help educate our listeners on the importance of having a balanced portfolio that does include gold, especially since the dollar's been shrinking. In fact, companies such as Northwestern Mutual, they're the third largest U.S. life insurance company, recently purchased gold for the first time in the company's 152-year history. We're going to explain on the Gold Show why even life insurance companies are purchasing gold to protect themselves, protect their shareholders, and it's all going to be available for our listeners today when they call in as well.
And before we get started, though, can we offer for the listeners, let's just say a copy of the Gold Guide at no cost today?
Absolutely. It's normally $80, and it does come with the DVD. It's a great education, and it's a great place to get started to learn about the wealth of knowledge that there is to know about owning gold. And if you want the free Gold Guide, all they have to do is pick up the phone and call us toll-free at 800-510-9594. Again, that's 800-510-9594. The Gold Guide will show listeners how to purchase gold at the lowest possible prices, which gold coins and bars will give them a better return in the future. And just like it was featured in the Wall Street Journal, if you have an IRA or a 401k, we'll show you how to roll that over into an IRA backed by solid gold. It's still an IRA. You still get your statements, except you have physical gold protecting those retirement dollars. It's all in there. It's in the Gold Guide, and it's yours free just by calling us at 800-510-9594. And don't forget, you can also subscribe to the podcast today just by going to safeasgold.com, or you can see international gold prices at safeasgold.us.
Now, Jonathan, you have referred to gold as portfolio insurance. What is portfolio insurance?
Well, I'm a big believer in insurance in general. So just like you have insurance for your health or you have insurance for your car, a lot of people waking up to the fact that gold is a safe haven, it's a storage of wealth, and it's being deemed as portfolio insurance. So as the dollar continues to shrink, and it's, by the way, it's shrunk 9% mid-April, and this isn't anything new. In fact, today the dollar went up and people are cheering, but, that's short term. If you take a cross-section of the dollar and really look at its history and its peaks and its performance, it's been declining, and this has been happening ever since really the 1950s. So people are trying to find ways to diversify their dollar holdings into something that's going to be a storage of value, really a flight to safety and security. And people are finding it with gold. And in fact, if you go throughout time, go throughout history, there's reasons why members of the royal families, heads of states, they've been using gold to preserve their wealth for centuries. It's no secret. And as I just mentioned, Northwestern Mutual, the third largest U.S. life insurance company, recently purchased gold for the first time in the company's 152-year history. And in explaining the $400 million purchase, the Northwestern CEO told investors, gold just seems to make sense. It's a store of value. In the Depression, gold did very, very well. So people trust gold. And in fact, even a gentleman by the name of Gary Dugan, and he's the chief investment officer of U.S. banks, he says that there's a remarkable change in sentiment, that people want a portable asset where they know it's not going anywhere. He's talking about gold. And if you haven't added gold to your portfolio, well, guess what? It's not too late. And I'm not telling people to put everything into gold. That would not make sense. But what does make sense, and especially if you're working with a financial planner, they should be recommending anywhere between 5 to 30% of your portfolio to be moved sideways into precious metals, the tangible gold that you get to hold on to. That's the security right there. So if you have stocks and bonds and maybe some municipal bonds, this is great, but guess what? A piece of that pie should also include gold. That's the portfolio insurance. That's what's going to protect you against government currency devaluations. And if you haven't added gold or found out about it, it's not too late. This is the perfect time to purchase gold and start protecting those shrinking dollars.
All right. Now, Jonathan, how is gold priced? We can look on the internet and say, okay, this is the daily price of gold. How does that come to be?
Well, actually, the price of gold is fixed every day. It starts off in London with big banks such as HSBC, and it starts going around the big markets, ends up here in New York, and it closes when the New York market closes. So, what I like about gold, it's not like a stock where you can wake up in the morning and it's gone to zero. Gold tends to go down in $5, $10, $15 increments. So you can watch gold, and it's not going to jump down $100. And rule of thumb speaking, gold is independent of all market cycles. So, you don't have to be a rocket scientist to follow the gold market. But what you should be aware of and keep yourself up to date is, what's going on around the world, not just with the US dollar, but also maybe tensions in the Middle East, especially with Iran or maybe North Korea, that has an adverse effect on the price of gold. It actually pushes it up because the more instability there is, believe it or not, that's good for gold. But people are really looking at other factors such as inflation, and obviously with all the stimulus money that the government's been spending, well, that's going to create inflation, and inflation is very insidious, and it's kind of like a caterpillar on a leaf taking a small bite, and before you know it, that leaf is gone. That's what's happening with the US dollar right now, and people are trying to diversify their dollar holdings. And I always tell this story in probably most of the shows I do, but it really hits home with people who are listening for the first time so they can understand the benefits of owning gold. And imagine we were back in the year 1920 and we took a $20 gold piece, which is a 1-ounce gold coin, and a $20 bill. Well, back in 1920, they were both worth the same, and they would both buy a man a brand new suit. Now, today, that same $20 gold piece, the 1-ounce gold coin, it costs over $1,000 an ounce. That's what you would pay for a 1-ounce gold coin thereabouts. It would still buy a man a brand new suit today. But that $20 bill, it wouldn't even buy you a tie for your suit. And people can see how the value of the dollar has dropped because the dollar can purchase less consumer goods year after year. And that's inflation. So maybe a candy bar that cost $1 this year, well, maybe next year it can cost $1.17, and so on and so forth. So people are always looking for a vehicle where they can park their money. It's going to be safe. It's going to be secure. And if you listen to other experts out there, even people like Warren Buffett, who has clearly stated that the days of double-digit returns in the stock market are over. They're gone. They're finished. So people are looking for other ways to diversify their holdings. And in fact, Mr. Buffett, he recently purchased two of the largest gold manufacturing companies in America because he sees long-term value in growth in gold, just like we do, and in fact, just like other companies such as Citigroup and Merrill Lynch, who are expecting gold to be at $2,500 an ounce in the next 3 to 4 years. And I agree with that estimate, and in fact, it could be even higher, and it could actually happen sooner than that.
And your belief is what's driving this is a lot of the stimulus package and the world events are causing interest rates ultimately to go higher, and then there's inflation, and when inflation comes in, typically gold goes up.
Well, absolutely. It's like if we had a big plate of breakfast in front of us and we was eating pancakes, there's so many stacks of problems in front of us, whether it's inflation, whether it's the housing market. Don't forget about, unemployment. As I mentioned earlier, tensions in the Middle East, maybe North Korea. The dollar's up one day, it's down the next day. That shows us that there's a lot of volatility. And as Ben Bernanke hugely stressed a couple of weeks ago, we've got to take care of our U.S. trade deficit, which is the largest in U.S. history right now, in the $1 trillion range, and we have to get that down in order for the economy really to recover. So all these factors out there are reasons why companies like Citibank and Merrill Lynch are saying $2,500 for gold, and guess what? They don't even sell gold. But they're looking at all the problems that we have on the horizon right now, and this tsunami wave of economic destruction that's been upon us. Well, the people that have buried their heads in the sand and pretend nothing's happened, they're the people that are down 40 to 70% right now in the stock market, in their retirement plans. And it's a prudent man that foresees danger and prepares. And this is the best time to look at your finances, identify those dead dollars that are losing your money, and really, notice where that money is parked, and move it sideways into precious metals. That's a storage of wealth. It's going to be there when you need it.